Good afternoon and welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. We're coming to you from the market site with Matt Forrester, who's the Chief Investment Officer over at Bank of New York Mellon Lockwood, and we're here to focus on macro trends for 2019. Matt, it's great to have you back at market site with us, and you think the U.S. economy is going to continue to outperform global.
So sure, I think the U.S. economy acts something like a battleship, and when you start to get momentum going into this forward direction, it's hard for that to turn around very suddenly. We've come into this year with a lot of momentum from last year, relatively full employment. Most people are employed in the United States. 70% of GDP is driven from the consumer, and that means that we're likely to sustain some forward momentum for the economy going into 2019.
All right, and there are some outliers out there, and you wrote that in your 2019 report, that the markets are worried, but they're worried about the right things.
They have been worried. Certainly, the spate of data that we've really gotten over the last several months, particularly around the global economy, has started to show some real signs of weakness. In fact, we got some numbers today here in the U.S. that are just starting to show a little bit more softness than maybe what the markets expected. So markets are really concerned about that. Everybody has to remember that for a balanced portfolio, that is a multi-asset class portfolio of stocks and bonds, the biggest risk that you bear in your portfolio is going to be global economic growth. So if global economic growth begins to slow or show some signs of weakening more than investors expect, that can be a risk factor for your overall portfolios, as we saw in the fourth quarter.
Right, but if you stay invested and you're diversified, that's kind of how you navigate these storms, because markets are supposed to go up and down.
Yeah, look what's happened since the fourth quarter. We've had, an absolutely rip-roaring January and into the beginning parts of February here. We'll see whether we can sustain the kind of 7 or 8 day rally that we've had here in markets over the past few days. Given the spate of economic news, that might be a little bit tough.
Right. Well, what about trade negotiations? Because that's going to continue to be in focus, particularly over the next couple of weeks, as there's the expectation of perhaps an outline coming out around March 1st.
Yeah, so we'll see, whether we get an outline. Obviously, the administration has shown some willingness to be able to delay the actual deadline for the conclusion of the talks. So I think markets are now very much expecting some sort of outline of an arrangement that would be made sometime over the next several weeks. I think it would be unrealistic for markets to expect a full resolution of that sometime very soon, but it's very clear that markets have discounted a lot of optimism relative to trade here in the last 4 weeks, and I think that's part of the reason why markets have really rallied here in the last several weeks in the early part of the year.
All right, let's wrap up with your volatility outlook. Are we going to have another Q4, which kind of shocked our systems a bit, or will it be a little bit more stable for 2019?
I actually think we're going to pick the volatility up quite a bit. Got to remember that we came off certainly a 2017 that was the lowest volatility that we've ever seen.
That was an anomaly.
In markets. Oh, that's something we've really never ever seen. So last year was more typical in the sense that we got several market declines in February and then again in December that are more typical year for equities, particularly U.S. equities in general. So we expect volatility to pick up to some degree, and I think it's going to be particularly rocky here in the first half as we begin to assess whether or not we're actually going into a more pronounced slowdown than maybe markets are expecting.
All right, Matt, thank you as always for joining us at MarketSite. Great to get your annual insight, and thank you for joining me throughout the day. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.